In this video we will tell you the 9 money rules the rich know but you don't. Actually, the rich don't reveal these rules because they know that anyone could get rich by following these, so that's why they keep these as secret. But we have researched about it a lot and found out all the rules. Watch the video till the end or you may miss some crucial information. Now let's begin. 1. Make sure to save a minimum of 10% of your income. Building wealth starts with prioritizing saving for yourself. Allocate 10% to 20% of your gross income, which is the amount shown on your paycheck before deductions. By setting aside 10% of each paycheck, you'll have more than 1 month's salary saved in your first year. You will also enjoy a significant reduction in financial stress and drama throughout the process. There's no rush to begin saving such a large portion of your money right away. Achieving a savings of 10% to 20% is a long-term goal, not something that needs to be accomplished overnight. Consistently saving 1% is more effective than repeatedly attempting and failing to save 10% to 20%. Today, it's becoming increasingly convenient to adapt to a lifestyle with reduced income, all thanks to advancements in technology. By setting up automatic deposits from your paycheck and checking account, you can easily contribute to your retirement account, savings account, or other investment options without the temptation to spend the money elsewhere. Not seeing it will teach you to live without it. 2. Make sure to pay off your credit card balance completely each month. 1/3 of people consistently pay the minimum each month, while another third occasionally pay the full bill but often end up paying the minimum. Simply put, many credit card users are only making minimum payments, causing them to lose a significant amount of money. Credit cards typically only ask for a small percentage of your balance to be paid monthly. The minimum payment amount shown on your statement is not a suggestion. Regrettably, many of us view this minimum payment as merely that. Choosing to pay more than the minimum can save you money in the long run. Interest rates fluctuate based on the card, with credit cards typically charging around 15% on unpaid balances. To be honest, paying only the minimum each month will result in paying thousands of dollars in interest. This substantial interest may accumulate over time. Simplifying and gaining control over your financial life can be achieved by eliminating high-interest debt. 3. Attempt to reduce expenses. You might be spending your money on items like a morning coffee or lattes daily. Wealthy individuals never squander their money in this manner. They significantly reduced expenses. You can save a significant amount of money by doing this. According to reports, nearly half of the income of the average American is consumed by impulsive spending. There is a fantastic approach to resolve this. When you come across a product you like and feel tempted to buy it, try telling yourself to wait for 5 days before making the purchase. Consider the product on the 3rd and 4th day to determine if you need it. If you tell yourself no, it will become evident that you should let it go. If you feel it's necessary, go ahead and buy it. Imagine turning your impulsive purchase into a valuable investment. 4. Make sure to maximize your contributions to your retirement accounts. When it pertains to planning for retirement, it's important to make thoughtful decisions because there are no second chances. Starting to save money now will benefit you in the future. Starting to save for retirement early can lead to significant growth over time due to compound interest, ensuring you can sustain your lifestyle after you stop working. Just imagine how much easier it will be if you start now. According to some analysts, saving more than 1/3 of your salary will help you catch up. Consider contributing to your employer's 401k retirement account if available, and think about investing extra funds in a traditional or Roth IRA for additional tax benefits. 5. Avoid purchasing or selling individual stocks when you're just starting out. Avoid investing in individual stocks and attempting to outperform the market if you are new to the world of stocks. Let me clarify something. People can definitely hit the occasional home run. Research indicates that only a small percentage of individuals can consistently outperform the market. Choosing individual stocks may not help you outperform the market and could actually set you back significantly. 6. Consider investing in low-cost index funds. Embrace Warren Buffett's guidance. Consider investing in index funds for long-term growth. Buffett is not the only one who supports low-cost index funds. Investing experts John Bogle and Charlie Munger also believe that successful investing comes down to this strategy. This concept ensures your success in the investment game, where most other investors tend to lose. There are two main reasons why investing in index funds is effective. They are diversified across various areas, reducing the risk associated with individual stocks, and they come at a low cost. It's worth mentioning that not all index funds are inexpensive, and expenses are crucial. Some investment options have expense ratios as low as 0.1%, while others can go as high as 0.8%. Small variations can accumulate to create a significant impact. 7. Ensure that your financial advisor adheres to the fiduciary standard. If you're seeking to invest in professional financial advice, keep one term in mind: fiduciary. Financial advisors who adhere to the fiduciary standard are legally obligated to prioritize your best interests and are not compensated for pushing unnecessary or expensive investment products. Most financial advisors do not adhere to the fiduciary standard. Individuals who adhere to the fiduciary standard are required to provide advice that is in the best interest of their clients, while those following the suitability standard only need to ensure that the advice is appropriate for the client's financial situation. It's highly likely that individuals who hold certifications like CFP, work as RIAs, or are fee-only advisors adhere to the fiduciary standard. 8. Make sure to purchase a home when you are financially prepared. Owning a home can be expensive with costs like the down payment, mortgage interest, closing costs, property taxes, maintenance, renovations, and unexpected expenses. Ensuring it will be a wise financial choice involves following basic guidelines such as managing your debt. Having high debt can make home ownership a challenge and increase the risk of financial difficulties if unexpected issues arise. You make sure to have an emergency fund. Are you prepared with a fully funded emergency savings account? If you fail to do so, you will not advance. Secure funding for your emergency savings. Consider investing in a home. Strive to have a savings that is as close to a 20% down payment as possible. Putting more money down on your home purchase can significantly reduce your monthly mortgage payment. You'll need to borrow less money to finance the home, which is great news. This has the potential to save you tens of thousands of dollars throughout the duration of the loan. You stick to your budget regularly. Avoid becoming overly emotionally connected to a particular house. There are always more homes to purchase. Negotiating becomes simpler when you are willing to walk away. 9. Ensure you are well protected. Dealing with insurance can be challenging due to its complexity and lack of excitement, causing many to postpone discussing it. It is crucial if you want to manage and safeguard your finances. Insurance can be complex, but it's an essential part of protecting yourself. By paying a monthly premium, insurance can shield us from the financial repercussions of unexpected events. Begin by exploring the type of insurance that is most suitable for each stage of life. When thinking about your family, it's important to prioritize 3 key types of insurance: disability, life, and long-term care. That's it for this video. Now you know all the rules of money that could actually make you rich. Only knowing these rules will not do. You will have to work hard and make these rules your habit. By doing this, you could gain financial control. Press the subscribe button below if you want to know more amazing tips and guidelines. Press the like button if you found this video informative and helpful. Share this video with all of your friends and family members for them to learn and improve financially. Add a comment below if you are having any queries or suggestions. Thanks for watching this video till here.